The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 75 at 15,369. S&P's down 14 at 1740. Comp Index down 55 at 3976. Gold is up 10 at 1261. Silver's up 48 cents at 1990. You got platinum up 6 at 1381. High grade copper's down again, down at 3.18. Oh man, that copper, you got to keep an eye on it. Crude oil is up just a tad, 97.50. Bonds are down 12.30 seconds. I'm going to talk about that in a moment. And we've got the dollar down 12 cents. Euro is up just a fraction. And thank you, Steve Rose, for 2 great hours, especially the improvised, extemporaneous part of it. Steve really knows how to handle these little quirks that we have in our platforms that occasionally we come across, and you got to do a little improvising until that chart comes back up fresh and clear, and he did a great job. So show goes right through today. You've got Steve Rhodes kicking us off 2 hours. I do the 11 o'clock till noon. You got Larry Pez Wednesday till Larry Pesaventa comes on. Larry comes on straight after me. You've got Daryl Martin. You've got Dave White. Oh, and I have to congratulate Dave White. He had some fantastic trades. I know for my subscribers, we had some terrific trades on the volatility index. Really scored there, but David really took it to the nth degree. Congratulations. That was superb, plus some great stocks on the short side. We've got right now something very interesting going on. Oh, let me just finish up. You've got Dave White. Then you've got Tom O'Brien, 4 o'clock till 6, wrapping us up, giving us his opinion. And, of course, what he does is he looks at what happened during the day and what he expects based on his methodology going into Thursday. That should be really interesting today. And I know he's been looking at the short side, and then we're going to see what happens. Had some great calls on the gold so far. So we've got a full house here at TFNN, and I love to take a moment just to talk about the E-minis. This is a very interesting period. Now, there was a guy on the radio on CNBC this morning. I've followed him periodically. I used to have a little software package of his that I bought only because I had a client, a mutual fund client, who had been rated number 1 at some point after we had begun working together. And he used Tom DeMark's work a great deal. I didn't quite understand it, so I got the software to understand a little bit better, especially the 13, which was a very big thing. And I just have to, I've said this before, this is not unlike looking at cycles, lunar cycles, time cycles, my left side, right side, price time match. When these things hit, your eyes pop right out of your skull. You just say, how? You just throw up your hands and you say, how did that happen? I know I've spent a lot of time on my technique and blah, 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 but just to hit it to the day or to the penny, when it misses, you don't get to hear about that very much. But in fact, when these things miss, I'm remembering back this one particular client who used the Tom DeMark methodology. He just got obsessed with silver. This was back in the 1980s, and he got a Tom DeMark buy on silver. And I'm saying, gee, I got a sell signal in my methodology, and he just kept following that silver incorrectly. I remember being down in Florida at the time. That was at that big recession. So that must have been 92, around about 92. And I remember looking at all those really lovely houses, hotels and apartment buildings in the Novo, what do you call that style again? The start of the 50s. No, start of the 30s. Anyway, it was in that style, and Nova something or other. And what happened was, I thought, wow, what a great time to be buying property. It was a bad time in Miami. And I said to myself, well, you know, I live in Boston. I don't know anybody here. I have to come down and I have to be repairing. I have to do a lot of work. What fantastic pieces of property, beautiful colors. It said Art Nouveau. That was it. And I decided not to. I've always regretted that because it was a dumb mistake. It was just they were going for a song. Anyway, I remember one particular pink building next to the hotel I was staying in. And I'm getting these. Now, it couldn't have been email. Couldn't have been text. I'm getting these phone messages, right? Just the old regular telephone messages from this guy, and he's saying, "What's going on? Where's Silver? What's going Silver?" And he didn't do that well. So I have to tell you that these things either work fantastically, or there's a miss that is like the train station. It takes a fork in the road, and on the wrong fork. So all I can say is that Tom was talking about a major match of the Dow with the contemporary chart that we're looking at, right to the day. I see something quite different. I see a severe pullback in the double digits, but I'm not looking for the same thing. And I'm beginning to wonder with what I'm looking at here in the volatility index. Forgive me if I jump around a little bit, but that's just the way I work. When I'm at this at night, I am just everywhere. See, the volatility index is up 1.35, but it's at 20.46. 2 days ago, it went to 20.48. I need leg D to start at 21.58. And I'm saying to myself, this is very interesting. What if on Friday, when all that economic news comes out, jobs and everything else, what if there's a positive spin and tomorrow we get leg D and out of the blue Friday turns out to be an up day? I'm just thinking out loud. Meanwhile, back at the ranch, I'm trying to vary for my subscribers. I'm selectively looking at short positions. I'm trying to avoid the noise. I'm trying to avoid the fact that I've been into this one particular position umpteen different times. We've made money. We've lost just a little bit of money. We managed to get almost the exact top each time. And it's been a fantastic ride down, even though it's at highs. So the ride down is only 4%, 5%, 7%, and then it bounces right back. I'm beginning to look at it now and say, you know what? I think this particular index is really struggling and that it could be done. So we'll see. So meantime, we do have shorts. At this particular point, we actually have no longs whatsoever. That's very unusual for me, no longs. Did have one this morning, got stopped out for a very small loss. Now, we could have made a profit actually, but I just wanted to keep it as long as I could. And we in the process of looking at areas and stocks that are coming out with earnings that possibly could be disappointing. And I'll go through some of those in a moment that have already given us some very important information. One thing I am looking at is the number of stocks that are given round numbers at the tops, but they could be silent round numbers. In other words, it might be the 177 that was the exact high of whatever it was. I can't remember. Yesterday I was looking at it. Or it could be intraday where it doesn't show up. So a bunch of things I'm looking at like this. I do want to mention that at 6 o'clock till 7, this is a little unusual at TFNN. We're now going on to 7 o'clock on a Wednesday night. You do have Ali Ford and Tom O'Brien, Mindful Living. It is really an excellent show. I've got a book that I was given just recently. I must find the title. It's got this crazy title, which is the exact anomaly. It's the opposite of what you think it's going to be. And a very good friend of ours that came to stay with us just recently from California, she's very involved in this, and it's about mindful living, in fact. So I'll try to find the name of the book and the author. I've read chunks of it. It's a very big book, and it's very interesting. So I want you to go to the VIX. Now, the VIX has made a 15 to 17 session weekly U-shaped pattern, and this is the first week that so far into midweek the price is held way above the declining inside track repellent zone. Number one. It's the first week that we've got it since that 1 week in the week of the 28th of December, where the volatility index spiked up and closed almost at the weekly high, that the weekly chart has closed above the 200 period moving average. That's the only time since the big top back in June, the week of June the 1st and June the 8th of 2012, where 1 week it closed decisively above the 200 EMA, and then whoosh, it went down, and it never came back until that one pop-up back in, what did I say, it was December, yeah, December of 2012, and since then, it's been close. Last week it closed at the line. This week it's above, but the week is young, so we're going to be watching this one really closely. And here's the other thing on the monthly chart. This is the first time you've got the stochastic giving a positive divergence between the recent lows and the MACD turning up, and it suggests very strongly that the VIX index will be making higher highs and higher lows over the coming weeks and maybe coming month and a half or two. I don't know. That's the way it looks at this particular point, halfway through the week. I should not be looking at a monthly chart when the month is only a few days old and the weekly chart still has 2.5 sessions to go. But I am anticipating leg D above 2148 in the VIX index. Where it closes 2 days later is going to be absolutely imperative to watch. Stochastics at 88%, that's good. Volatility index is, the MACD is still very strong in the daily chart of the VIX. Now, a couple of things that I needed to look at. Let me look at my book here. Now, Raytheon, isn't it interesting? Raytheon made an all-time high 3 days ago. I'm going to call that leg D to the upside. It hit 95.83. Now, we know that stocks that get to 95 very, very often just use that as a starting point because they love to go to the 106 to the 112 area over the next up phase. So I'm watching this because I've got the monthly chart in leg F. I've got the weekly chart. I've struggled with this. I could count it only one way, and that is if I'm very strict about the Chapman way, which I try to do, peak A, peak B, etc., etc. 57.93. I could have called that a phantom peak, and then it would be perfect. I have to call this leg C right now. That's really weird, but I'm calling it leg C. I know for a fact that they're working on some amazing things, but does that... Hey, that's got nothing to do with whether they're going to make money or not. So I have to look at this purely from a chart formation. The pullback from the 95s to today's low of 90.49, trading now at 91.48. I have to watch this because this could turn into a head and shoulders. I'll be right back. Basil Chapman, 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Just a couple of questions that I had in the den. Very good questions. One is, I'm wondering if QE has an effect on various technical systems or it shouldn't matter. As far as I'm concerned, there is always something going on in the markets. I don't really care. I look at the peaks. I look at the troughs. That's, case closed. That's just the core of the technique. There are other things that, of course, I always look at, using the 9-period moving average as support, all these different other aspects. But that is the core. As you saw yesterday, when I can't find it now, when I had that 10-minute chart up, it was, and the naked chart, it just went peak A, peak B, peak C, peak D, and then whoops, it came down, did it again. That's the technique. Now, the book that I was looking for, Full Catastrophe Living. I don't think that's a good title between you and me. Using the Wisdom of Your Body and Mind to Face Stress, Pain, and Illness by John Kabat-Zinn. It really is. It's a very fine book. I mean, I glance at it because I look at it. When a book is this thick, I tend to just jump around. I have a very difficult time going from one step to two steps. But so far, it's just really a very interesting book. Even has charts and stuff. So I just said to myself, Full Catastrophe Living. However, it is a book on how to use your body, mind, face, and in terms of looking at stress and pain and illness. And I think that Tom and Ali do a great job with that show at 7 o'clock in the evening. Now let's go through some other things. Look at this. We've got AAP. What did it have? It had 120.31, a peak F top in the daily. This is advanced auto parts. It had a peak D in the weekly and an E/C in the monthly, and we know that people are keeping their cars longer, and that's the reason why AZO and companies, all in companies like this, have had such tremendous advances. But when you look at the innards, it had 118 round number close. And I always look at that and I say, whew, that was the same day that it made the high. 118 round number close. So that tells you that at any point, it's at 110.57 right now. If it was to rally and get even close and closed above 118, this thing's going much higher. I don't think it's going to do that. I think, in fact, it's made a pretty serious top. When you go to MON, Monsanto had 117. Isn't that interesting? 117 high, 117.50 high on the 2nd of January, and then it tried to retest. It went to 117.43. To me, that's very much like that two-bar reversal. So I'm looking at that, and I'm saying, okay, what did I say? It was 117.31 or something. And that, to me, is a silent signal. And what happened? It's made a peak E in the month, in the daily, peak D in the weekly, and a possible peak D in the monthly for Monsanto, which is showing 106.44, down 21 cents, takes out 103 to 102 support. That's going to be like that A pattern, the single letter A, that uppercase A. It's going to go straight down. It could just come all the way down to the 90s. So I'm watching this one very closely. It's got a little bit of support right here at the 200-period exponential moving average. And to me, that 200-period moving average is always something to highly respect, as much as the 9-period moving average. So we'll see if it can bounce and if it can save the day by not breaking under the low of 3 days ago, which is 104.08. Now, if I look at... oh, yes, I want you to look at the XLE. Look at this, XLE. This is the energy. Trading right now at 82.13. Makes a peak F in the Chapman wave at 88.64. 88.64. That should be 54. 88.54. And then there's the holiday. And then it opens up and comes all the way down. It goes to a trough D, E. This is at a trough E in the daily. Under the 200-period moving average, which is at 83. It's already at 82. It's gone to the 81s. But it's a peak F in the weekly, and I'm pretty sure that I'm going to be calling this a peak F in the monthly with a double top. Back in May of 2008, it hit 91.42 at peak F. Whoosh, it goes down where? To the 200-period moving average at 37.40. And then what does it do? It rallies back. Thank goodness I typed that one in because I didn't remember it. To 88.54. 88.54 is the high of December. 88.54, type that in. 88.54. And where's it trading now? 82.17. Under the 9-period moving average in the monthly chart for the very first time since it broke out back in August of 2012. I have to tell you something. I think that we're in the process of having at least a very big correction in some areas, a rotation in others, and some stocks are actually holding well. I'll be back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Question here. Basil, have you done Chapman wave studies on quarterly or yearly charts? If so, how does that work? All I can say is that TradeStation doesn't allow me to do that. I meant to ask them. I think tonight I'll be speaking with TradeStation again because they're trying to work on some of the problems that I have. So I'm going to ask them, but I know that I have had studies and I have gone to stockcharts.com, I think it is, where I was able to do a quarterly chart. I think Fidelity has. I should go back to the Fidelity chart platform and do some work there. But when I look at it, some people have shown me the Chapman wave with the quarterlies and occasionally with the yearlies, and I have to tell you, I'm always shocked. It seems to go to at least a D, even in the quarterlies. So, yeah. Now, as Peak D says in the Chapman wave works on any time frame, it really does. Then there was a question about the DIG and the DUG. Well, is it time to short the DIG, or what should one do? Well, the DIG in the monthly has gone to a peak E. I had these all notated, but of course I don't have them now. I don't want to just guess. So the weekly chart, let me just do this quickly. So that's an A, B, C, D. A, B, C, D. A, B, C, D, E. It's gone to an E in the weekly. And the daily, and now it's pulled back quite sharply, and the daily gave a double top, and it's pulled back to the 58.84 area. That's DIG's, the Ultra Oil and Gas Pro shares. This is very important. When a trend changes, let me show you something. This is the DIG. Look at the DUG. This is saying on the daily chart, I've gone, my previous high was a peak E, and I pulled back. This time, I've gone A, B, C, D. There is not an instant restart because it's more than 3 bars. It's 4, but it could certainly be a bit brand new buy mode. But most importantly, I'm in F/B, and I could go very well to the 58.90 level, and I'm at 57.80 right now, up 99 cents, which is the 9-period moving average. The stochastic is really good, and the MACD is still very good. So it says that the DUG could go higher, but it's getting to a period where it could be choppy. So if you were going to, this is not the time to be shorting the DIG. It's time to just have patience for a week, and then you'll probably buy less than a week from today. You'll have a really good sense of whether there's a whole brand new down leg to go in the weekly chart of the DUG, or whether the bounce is going to be something more substantial. So I'd say no. Keep in mind that right now the DUG is the play, the upside, but it doesn't mean to say that the DIG at this particular moment, like I wouldn't tell you to buy the DUG at 57.80 when the target is 58.90, a point and a quarter if you want to hold it for a longer term. But no, if you want to hold it for just a quick pop, that's okay. Holding it for a longer term, I think you'll get a better entrance after it pops up and then pulls back and retests the 56 to 55.5 area. That's number one. Number two is there was a question. Where did it go? The effects of QE on technical systems. There is always something going on in the market, and whatever technique it is, if it's consistent, how robust the technique is how it handles all inconveniences. In other words, whatever surprises come along, how does it handle those surprises? Were you ready for it? Were you able to trade around it? Did it impact the technique so badly that you don't really know where you are? It's going to take a while to get back. This is what happens with those 13s in the DeMark system. If it misses, hey, you're going to have to wait. It's like a cycle date. You're going to have to wait for the whole next cycle. So that's why I love the Chapman wave, because you don't have to wait more than one bar, one peak or trough to be able to try your best to get right onto track as quickly as possible. Now, I wanted to do this. I wanted to show you something. So that's the DUG. Yeah, now look at this. DDD, triple D. I spoke about this recently. I said, I don't know anything about it, but everything that I'm looking at says that the 97.28 top, we did have a fabulous one trade on it. This opens at 95, makes a high of 97.25, and that's it. Peak F. And then it plunges down to today's low of 54.63. That's the daily peak F top. The weekly goes to a peak F at 97.28. I put 28, but it should be 27. Oh, it is 28. 28. And then what happens? Plunges down a single leg A to the downside. The monthly is in leg E. And it sounded so sexy. Manufacturers printing 3D objects, 3D systems. Well, all I can say is there's no money there right now. That's what the stock is saying. But boy, at the time it sounded like it was the hot thing going into the Christmas holidays. Now look at this. The peak E in the monthly, under the 9-period moving average, most severe 2 bars to the downside it has ever had. That's also because it's an IPO back in 2010, was it? 2000. Whoa, goes back. Oh, this has been around for years. 3D systems. Was it always called 3D systems? Hey, wait a minute. This goes back to 1988. I must have remembered 3D systems somehow. All right. So, 3D systems was not an IPO. It's going back to 1988. And in fact, it's made a peak E top, an all-time high. Oh, look at that all-time high. So there's a problem there. Now look at this. RL. Remember we were talking about this just the other day. Ralph Lauren. Ralph Lauren made a peak. Oh, I never finished. I did finish it, but it got knocked off. So that's a peak A, B, C. A, B, C. No, that wasn't the high. I remember this. A, B, C, D. D was the high. That wasn't the all-time high. The all-time high was, I think, right there. A, B, C, D, E, F. Peak F top at 192.03. The day before, it has a high of round number 190. I remember typing all this in. It makes a U-shaped pattern, fails. That's the drop bucket formation in the Chapman wave. And what does it do? It plunges down to 157 in October the 17th, 2013. Tries to rally. It rallies to a peak C minus at 181.07 on the 7th of November. That's really not the issue. The issue was, oh man, I haven't got it notated. The issue was, it went to A, B, C, D, and then A, B, C. Oh, man, I can't have it. I want to do this slowly. A, that is A. Oh, there it is. A, 50, 76, 71. Yep, A, B, C, D, and it's either E, F, G, or C minus. And then it goes to a G at the top at 192.03. And now it's trading the low this week has been 146 round number. It pops up on good earnings today, but then it turns out it wasn't quite good earnings, and it's down 3.92 at 150. When you see these absolutely fantastic stocks of 2011, 12, 13 suddenly start to make new lows, and the monthly, this is the second month that it is under it is the 1, 2, 3. This would be the fourth month it's under the 9 EMAs. It's making that peak E top in the monthly chart. So this to me is, I have to consider that what's going on right now is quite serious. Now, here's something else that's very important. I want you to do the RL with the EL, and then I want you to go to coffee and to the UNG. Remember, I was anticipating a leg D, and then we've got to be careful in the UNG. So EL is Estee Lauder Cosmetics, making a peak D if there's no new high this month. The high was 76.23 in the monthly, and the weekly peak F top at 76.23. And there are so many. I did this the other day. I said, look at this. Peak D once, peak D twice. What a technique. Peak D 3 times with that rogue wave, pop to the 76.23 high. And where is it today? It goes down to 63.57. So I want to show you something else. How powerful that leg D is. Remember you remember the UNG is the United States Natural Gas Fund. We had a caller, and I said, I still like natural gas. Watch out. If it gets above 2706, this is just the other day, you got to be careful because that's leg D, and the stochastic is not quite confirming the move up. So what happened is the weekly chart is in leg D. It extended today. The monthly chart is in leg D. I love that pattern. You remember of the H pattern successful test? Said a break above peak C of 2409 could take it quite a bit higher. Well, today it made leg D. It's pulling back from leg D. If you have profits in UNG, I'd say, remember I said before, take off some. You can leave the rest. Now I take off a little bit more. It's still acting very well, but don't get greedy. This is the time. NGH 14. NGH, this is leg D, and look how it's pulled back in the actual contract itself. Leg D, it's only leg B in the weekly. That's why I'm saying keep your core at the lower level, but you've got to take out quite a bit from here. Now, here's something else. Remember we had a call, we had Dan looking at JO, which is coffee, and I said, I love the chart pattern, but for money management purposes, I would suggest two things. One is either you put a stop under the day's low and you have it as a trading stop on some part of your position, or at that moment you just take a little bit off right there and you keep your call. Well, look what happened to coffee. JO is at 28.42. I have no idea if this is leg E or brand new A. It is leg D in the weekly chart. You've never seen monster moves like this in the commodities. It happens very rarely. These off in money, this is real money. Going from the low of the 22.30 level to where we are, 28.42 in the futures. Coffee KCH, I think that's what I'm going to. Is that correct? Probably not. KCH, KCJ, anyone? KC. Well, KCH. I'll do KCH right now. We'll do it live. Look at this. In the weekly chart, it's A, B, C, leg D. huge monster move, and the stochastic's at 78, isn't even at 80% yet. Something's going on. Your coffee, believe me, folks, your coffee is going to be coming down in price. That's the coffee daily, weekly, and monthly. Look at the daily. You've got that. Now, let me just double check here. I'm looking at the March contract. 104.15, 104.15. Now, in the futures, I tend to take the low bar, double bottom low, as a low instead of making a V-shaped pattern. I'm not going to do that. Well, I don't like to change plans in the middle of the thing. I'm just going to keep it. This would normally be my A right there. B, C, D. Then a brand new A, B, C, D. And it pulls back. And then what the heck is this? Is that an E? I'm putting it as an E because to call it a brand new A says we're actually going to be going quite a lot higher. But isn't that amazing? I mean, when I say amazing, that's with a capital A. I don't even know whether to put an up arrow. I'm just putting a plus sign here. That is coffee. And there's not a single sign just yet, because the stochastic's at 95%, that there's going to be anything but a high-level consolidation before it tries to move a little bit higher. So all I can say is, hey, hope you guys are holding on to your coffee contracts, because this is still great. Remember, I said keep a call and have a trading stop either on that day's low, which it wasn't hit, or you could have taken a little bit off at that moment. Ooh, this is quite a move. And to have a contract that you could actually, you don't have to have a futures contract or anything. Anybody can look at JO, because it is an ETN. The note, iPath, Dow Jones, AIG, Coffee, ETN. Question, could I look at... Gringo says, come on, Basil, make me feel good and call it a new A. I'm calling it a new A/E. There you are. Cocoa is CC, I think. All right, let me just look at I've got the continuous contract, I think, all notated. Let's check it out. Yes, Cocoa, not Coco Chanel, but Cocoa itself, the bean. I think they call beans. Let's go to the daily. Let's go to this weekly. Okay, we've got another segment coming on. I'd like to look at cocoa because I thought I'd done this in great detail, but probably not. A, right there. A, B, C, D, E, A, B, C. In leg C up, I'm calling it, at least for now. I could give it an instant restart. No, I'm calling it leg C up in the weekly chart, leg B in the monthly, and peak C in the daily. This is very interesting. There was a peak C1, C2, C3. That's like a triple top, which can be counted like a D, and then there was almost like a restart. So this is A. Wait a minute. A is 27, 23, 27, 27. No, this is A right here. A, B. These are gray A and B. And I have no choice right now just to say, to be consistent, normally with that triple top, I count this as a brand new buy mode. But it did not break below the initial start from the November low. So just to be safe, I'm going to call this D/C. There's nothing I need to do. I'm just trying to be as heads up as possible in my work. And what I am saying is that if cocoa pulls back under 2.84, it's trading at 2872, down 5 right now. If it pulls back under that, it might be a D. I'll be right back straight off.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Don't forget, stay tuned for Area Preservation. Should be usual. Great show as always, and I'm going to be just showing you something very important. Wynn. This is Wynn Resorts. Had a spectacular move. It pulled back from the 216 area all the way to the 189s, and then it zoomed up in 1, 2, 3, 4, 5. In 4 days, it went to 219.91, and now it's come back down. It's got that U pattern. It's a peak F top. If it can't break above that, certainly if it can't get above 212 to 215 in the next 3 days, but instead starts to take out 205. It's trading at 207 right now. That'll be very negative. But the weekly chart is about to create a technique that I call the sandwich. You see the strong red, this is the middle chart right here if you're looking at Tiger TV. See that strong red candle? See the big candle, that overlapping candle? That's engulfing. And now you've got another red candle. If that red candle this week sees it close towards the 198 or lower area, that, if it was green to red to green, is a very positive sandwich. That's the hot dog. But this way, red to green to red says watch out, because if WYNN, WYNN, trading at 206.96 down 664, takes out 189 anytime this month, it's going down sharply, and it should test the 180 level. 174 is the 9-period exponential moving average. And I don't remember who said it. He said that Mr. Wynn, whatever his name is, has done everything to perfection. And I'm saying to myself, gee, perfection, double top. I'm going to be watching this closely, because absolutely, if it breaks into the 220s, that is perfection. That is going higher. But at this particular point, I'm looking and saying, uh-oh, another rotational aspect. Is this going sideways between 180, 89 and 215, 219 for a while, just to consolidate? I'm watching this one very closely, because it's one of the big winners, WYNN. Now, let's just do one other thing that I wanted to look at. I did the UNG. I said it's going to D, went to D. Yeah, I just wanted to talk about this. I've done over the years, many years, I've spent a lot of time going through the Belle Epoque. That was that whole era. That was like the that period going into the early 1900s, going into the 1920s. And basically what we're looking at is that I believe that when we look back at this, people will turn around and say, wow, what were they talking about? The 2000 period, for the late first decade, was really the golden era. It just... No big wars of consequence I'm talking about. No, a very peaceful period, a peaceful period in the sense that there are reports from the United Nations even that the poverty level, the standard of the poverty level has increased, not the poverty level itself, but the living standards of the poor they've benefited worldwide. Just a whole bunch of medical, everything. This is a golden era. Now, if you haven't got a job, how can you even think it's a golden era? But you understand what I'm saying? That look at the market, look at how many people are actually employed, not how many unemployed. Look how many people really are employed. I think that we're going to look back and look at this as far as the wealth gap is concerned, there's just a study that came out recently that said the wealth gap has always been there, and this is actually one of the narrower wealth gaps that we've seen. Think of the Rockefellers back in the late 1800s. Think of that wealth gap with these. Go to Newport, look at those houses, those little cottages, those manor houses. That was a wealth gap. So this is a very interesting period that we're in. And I'll be going on about the Belle Epoque and about this particular period as we move along over the coming weeks. In the meantime, stay tuned for Larry Pesavento. Don't forget my service is the opening call. Go to the front page of TFNN. Check it out. You've got 2 weeks free. This is a perfect time for it. I'll be back tomorrow. Have a great day. Snowing like crazy here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.